Hi, this is Daniela Cambone, and welcome back to StansberryInvestor.com. Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Manchin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Hi, this is Daniela Cambone, and welcome back to StansberryInvestor.com with our Outlook 2022 series, The Tipping Point. More great guests coming your way. Please welcome back to the show, Peter Grandich, founder of Peter Grandich Company. Peter, always good to see you.
Always a pleasure and an honor to speak to you, Daniela.
Thank you, Peter. A lot of good ground to cover with you today, and I thought, well, how can we not start with Nancy Pelosi? The House Speaker was recently asked about an insider report that 49 lawmakers and nearly 200 staffers had violated the Stock Act's disclosure requirements since last year. Should lawmakers be banned from buying and selling stocks? She was asked by a reporter. Her answer was no. We're a free market economy. They should be able to participate in that. AOC actually pushing back, saying, how can they participate in this if they're making the laws and then profiting from it? So should they? Where does Peter Grandich see things? Were you surprised by Pelosi's comments?
No, not at all. I mean, she went into Congress pretty poor woman and came out worth, or hopefully coming out soon, $100 million. And I don't think that was on her salary. So, there's been a lot of questions. I think you have to start first. We found out, and I think only because we found out, we learned it, that Fed governors were buying and selling stocks, and now that's supposedly going to stop. And it really does make sense. I concur with you that AOC is one of the rare times I can say I agree with her. And That is, it really shouldn't be the case. And but it's been that way, and they've been exempt, in fact. In fact, they wouldn't even be able to be charged with insider trading at one point in time. So it's kind of foolish. And, when they want to know if we put more than $600 in a bank deposit, but it's okay for them to use inside, at least, if not inside information. So, I think most people would say they shouldn't be able to do it.
Absolutely foolish. One more talking point on politics here, Peter, before we get into all the good stuff. I want to get your thoughts on Joe Manchin blowing up Biden's Build Back Better proposal here. Any thoughts here?
Well, you have to commend the man. The man seems to be voting his conscience, not his party affiliation. And he says he's speaking for the people of West Virginia. And if he isn't, he's going to be voted out next time. But commend him that he stuck to principles. And, there's no certainty. That's why, you're supposed to be able to cross party lines and sometimes vote against your party and all. And I think he's a man of integrity. I really do. I mean, it's easy for me to say because I'm glad that what they wanted to bring about isn't going to happen. But just the fact, the way he handled himself and carried himself throughout this. And I suspect that he won't switch to Republican, but I suspect that if they attack him, as they've now planned to, I can see him going independent. And that would change the balance for at least this administration.
Yeah, good point. Good point, Peter. All right, let's talk more important things here. Peter Grandich's outlook, because I've had a variety of guests thus far, some calling saying that we've reached peak inflation, others saying we're going to have more runaway inflation, we're going to have a recession. What's in store for 2022 from your point of view? Now, when I spoke to you in 2021, which was multiple times, you were running back to cash. You were kind of preparing for the worst. As we're about to start 2022, where do you sit now?
That's correct, Daniela. Especially after Labor Day, it was my desire, which I let it be known to people that still choose to listen to me, that before the year would end, cash would be my largest single position, which it ended up being. However, as it didn't be as much because the gold and silver and mining share market became so utterly attractive that I found myself having to run back, or as I like to use in my work, I backed up the truck and came into the end of the year really aggressively again, owning gold and silver, particularly mining shares, starting with the majors. But even the junior resource market has been decimated to the point of where even the normal stalwarts, the few people that were always around for decades, even they went into hiding. So I just feel that cash is critical. I believe we've seen the highs in the general equity market. I find it preposterous from a days of being a financial advisor that you could talk to somebody and suggest to them they look at a 1.5% bond for 10 years when inflation's running at 6%. It doesn't make any sense. The loss that one will have unless you believe inflation is going back under 1.5%. But here we are, and that's all part of the fact that we are in, although it seems to be coming to an end, the biggest financial bubble of all time. There's no question that even bullish people I know feel that it's been unbelievably pumped up, but they give different reasons why they think it can continue. I don't. I think there's a price to pay, and I think as we end this year, we're starting to see that. We did see, Danielle, I think it's very important that while the top generals, so to speak, or the high command type stocks did well, many stocks below that are actually well off their lows and are actually in bear markets. So I think there's been at least a stealth correction, or if you want to call it a stealth bear market, or at least a two-tier market as we end this year. And I think it's going to be a lot tougher because politically and socially, this country's never been more divided, except maybe during the Civil War. And it appears that's only going to get worse in 2022.
Okay, lots of good stuff there. First, let's go to your point about the gold miners. Like you say, a lot of them just, plummeted. Basically, you came in, scooped them up. Now, you have the knowledge and the know-how of what to choose. For the folks at home who are looking at this sector, and as you know, there's so many projects to choose amongst. How do you do your homework? Is it just because you've been in it so long, you kind of go back to your tried and true? How do you decide where you want to place your money there?
Well, if I could turn this around, I would show you all the stock certificates that went to zero from some of the mining stocks I bought. So I don't want to say that I know any surefire way. I do know this. I do know things are pendulums or a chart that I have used. We're somewhere between despondency and despair when people look at mining stocks right now. There's no question about it. It's very hard to find, even among ardent bulls, people that for many years were bullish, have stepped aside and really hope people don't even ask them about that. And then you look at the other spectrum until recently, where the Bitcoins and general equities and Kathy Wood or whatever she's doing, everybody's buying. And so there's one thing I can tell people is everything in life itself is a pendulum, let alone in the markets. And we swung 180 degrees one way. We really have priced the mining industry and even the juniors to not be existent maybe a year or two from now. And that's just not the case. Sure, there's a lot of stocks that won't work out, especially when you go down, for pure exploration companies, because only 1 out of 10 ever really make it. But we're looking at major mining companies producing free cash flow at levels I never saw in almost my entire career. They just never did that. And so I just think that's one of the few safe places, maybe uranium, maybe copper, but outside of mining, it's very difficult still, even with this correction that we've seen now in the latter part of December, to find anything undervalued elsewhere.
How do you feel that the Fed's new direction will impact the gold market, Peter? Obviously, the largest asset buyback program winding down in 2022. Talk of interest rate hikes, as we know. How will that impact gold?
Well, people say, oh my God, interest rates are going to rise, going to kill the gold market. Well, interest rates rose in the 70s from single digit all the way up to 20%, and gold rallied from $100 to $800. So, I mean, although things are different now, you can make an argument for that. The real story on interest rate is real interest rates. What are interest rates minus inflation? And that's where the key is for gold. And right now they're at unbelievable levels. We have interest rates still at 1.5%, and we have inflation anywhere from 5-6%, maybe to high as 9 or 10%. And that's very, very bullish. So I'm not worried about that. And here's the other thing. I don't see how the Federal Reserve could ever stay on a path of higher interest rates, say to 5-6% again, because the cost to carry in the national debt at that point would be over half just in interest payments. So unless you tell me somehow the United States government's able to pay down its debt and not keep increasing it as it goes, I just don't see how the Federal Reserve can stay on a campaign that rises interest rates dramatically. Yeah, they might go back to 2 or 2.5 or 3. But they're not going back to 6, 7, or 8% because we wouldn't be able to pay the interest on what we currently own, let alone what this current administration wants to add.
Do you think the Fed will be successful in their plans to fight inflation here, Peter?
No, I don't think they can stay long. I call it, and I'm probably not the first, but I use the terminology. They created monetary heroin. And just like any addiction, when you get addicted to something, it's almost impossible to get off it. And we become a financial world, a society, and all that's become addicted with cheap money printed out of thin air. And I just don't see how long they can stay in that. And plus, the political pressures now on them that will become enormous, particularly if interest rates, really start to get up to where it really sees that people are having trouble making payments and things of that nature. So I don't see the Federal Reserve having the ability like it was 20 or 30 years ago, like Volcker, and just raise interest rates dramatically and not face any political headwinds. I think they would be hammered. In fact, quite frankly, I could see if things really get out of hand and the market doesn't recover, I can see him firing Powell and putting in his own person, claiming that Powell is the reason that he would be the scapegoat of why things are where they are. So I don't see that coming anytime soon, but I can see that being done if things continue to get worse.
Interesting. So Peter Grandich, you're a fan favorite. Like I said, we're winding down 2021 here. As we're about to start 2022, how are you repositioning your portfolio? Do you plan to do anything different? Like you said, you've allocated a lot of the cash into the gold and silver miners. Anything else you're thinking about right now?
No, I think cash is no longer a dirty word. I've taken the attitude, if you can imagine, and I use it. I put a chicken in a foxhole and I put my face on it because that's me. I really think it's better to be a live chicken than a dead duck. I mean, even if I'm wrong and somehow things get better, the economy recovers, there's political harmony and all. So then I have a lot of cash to participate in a new bull market. I don't think that's coming. I think things are going to get a lot of worse before they get better. And I rather err on the side of caution. And I'll make one other point. Never have I seen so much inexperience be so responsible for so much money. Almost 2/3 of licensed financial advisors in the United States have only been practicing since the last financial crisis. Everybody that's in there right now has only learned to drive on a one-way street. I don't know about you, Danielle. I remember the first time I came to a traffic circle. I got pretty messed up and nervous. We're going to hit some traffic circles in 2022, and I don't think we'd have the wherewithal among professional money management to withstand it. And, I can see trouble ahead because of inexperience.
So best ways to protect yourselves when we hit those traffic circles?
Gold. Again, gold, cash. If you're looking for capital appreciation, it's not how much you make, it's how much you don't lose, which really at the end of the day separates the winners from losers. I'm not worried if I bought gold or silver now or uranium, if I was able to buy it, and there are ways now, of losing a lot of my principal. It may not go up a lot, but it's not going to go down 25 or 50%. We can see those type of losses not only in stocks, but in the bond market. And there are a lot of people that can't afford that. So I rather err on the side of caution and own less is more. Not only is it the way to handle your financial lifestyle right now, but it is when it comes to investing.
Less is more. And to that point, we know what always gets in the way, Peter: greed, right? It's hard not to get greedy. And which leads me to a part of the reason I asked you to come on the Outlook, Peter, because for those of us that know you, you are, yes, a financial expert, but you're also very spiritual, and you always, at least in your talks and newsletters, you always kind of bring it back down to, at the end of the day, money is not everything, right? Money is not everything. So how do you keep that in mind in your day to day, Peter?
Well, having once turned the 10 commandments into the 10 suggestions for about half my career, and making and losing millions not once but twice, I found one of many scriptures is correct. You can't serve both God and money. You have to make a decision what's going to be more important in your life. A lot of times you have to go through something like I did. You have to almost be brought to your knees, which I was. And I concluded more money wasn't going to erase that. It was a change of attitude and what was important in life. Here, as we come here in a matter of days, Christians around the world are going to celebrate the single greatest birth there ever was. Someone said to me the other day, well, what if it's not true? What if it's just a fable story? Well, I always answer the same way. It's still a better way to live. And the interesting thing that the foundation to Christianity is the Bible. And the Bible is talks more about matters of money and finance than it does even about heaven or hell. So, I've spent the last 15 years and certainly what's left of my career wearing my, Catholic Christian face on my arm. Now, it closes more doors, Daniela, than it opens. It's not a way to prospect for new business if you're a financial advisor. But for me and people close to me, it's brought a peace and an understanding that I didn't have early on in my career.
No, and I respect that tremendously, Peter, that you've never lost sight of that or wavered from that. And like I said, I asked you to come on here on the eve before Christmas with, a final message to the folks watching at home. I almost want it to be a gift for the audience, regardless of your spirituality or your beliefs. I think this is a time of year where reflection serves us all, right? So I'll leave you the last word for our viewers watching, Peter, who are looking for some guidance and faith and hope as we navigate these really troubled waters right now.
Well, I always say this, Danielle, I hope you don't mind. There's really only three possibilities. It's what we believe is totally not true, or it's something we don't know. I'll just say that for me, and if you find it for you, or if you find what fate you maybe have brings you a peace and an understanding that no matter how troubling markets are or the world is, for Christians, there's a scripture that says we're to be in the world, but not of it. And what we hope in the darkest of days is that the hope that what we were taught as Christians and what the book teaches us, that there's an eternal life, because, it pretty will be a bummer if it isn't. That's what I'll just tell you. But it's that faith and hope and really what gets you through the day. And as much as we find ourselves in December caring a little bit more, and then we make our resolutions, maybe the resolution we should only make this year is, hey, I'm going to stick to one resolution, and that is I'm going to try to be a better person to myself, to the people I love, and the people out there in the world.
Sounds like a pretty good resolution to me. Peter Grandich, thank you. Thank you for your words. Thank you for your thoughts. It's always a joy speaking with you. And on behalf of my family to yours, Merry Christmas.
Well, Merry Christmas to you and to whatever holidays or beliefs people have. Just one day at a time, and be grateful that we're above ground. And if we accept that, we have a good start to the day.
One day at a time. Amen to that. Peter Grandich, come back anytime. Thank you so much for taking part in our Outlook.
God bless, Daniel. Take care.
And thank you so much for watching. We'll have more incredible guests and conversations coming your way, so be sure to stay tuned to StansberryInvestor.com. And in the meantime, don't forget to sign up for Premier Access at DanielaCambone.com. That's it for me. Thanks for watching, and Merry Christmas.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.